Hey everybody, Russell Smith here with the Dream Team at ALCOVA Mortgage down in a little town in Whiteville, North Carolina. And so I'm here to talk to you about working with REOs. And I want to tell you about some strategies and some different ways that you're able to work with investors to increase your business. I want to talk for a few minutes, and then at the end we're going to have a Q&A session. I love getting questions and see, what kind of things y'all can do to possibly stump me. But I've been in the mortgage business for 32 years, and I look at myself as a mortgage strategist, not just an application taker kind of guy. And I love educating whoever will listen, who just wants to learn more about real estate, financing, and certainly anything to do with buying and selling real estate. I want to thank NC Realtors for inviting me on here. Leah, thank you very much. She helped me a whole lot in getting this all ready. And so we're going to start off here with just making sure you understand that a big difference in working with investors is that I've seen is, you work with a first time buyer, any buyer, they're probably going to buy hopefully every few years or something like that. And of course, we'll hopefully refer you. But investors, you have potentially a lot bigger option or availability to close more real estate. And that's what I want to talk to you about and make sure that you understand that connection between REOs prior to all the way to a listing, courthouse sale, the whole thing, and then how this can benefit you and clients. And you can go out there armed and ready to go attract these type of clients. So now, and a big thing that matters is foreclosures. No one likes foreclosures, of course. It sounds like it's really bad. And I heard I don't remember the statistic, but I've heard in the past where, like, if you have a very low foreclosure rate, like very low, that means, hey, mortgage guidelines and things are a little more strict. It's a little harder to buy a home. So there's a healthy balance. You don't want a ton of foreclosures, of course, like the 08, 09 stuff. But some foreclosures mean, okay, maybe, things are opening up more for more buyers and all that. But the big things it does is it can help real estate investors where they're going in and buying a property and fixing it up and then renting it out or selling it to a buyer that maybe couldn't qualify to buy a house that was in, maybe disrepair. Because, a little harder to get approved for something like that. But this tells you the statistics on North Carolina. And, in some of the categories, it's actually, had a pretty big increase recently compared to other states. And again, it's not a bad thing. North Carolina actually is a very healthy state as far as it goes for real estate. A lot of areas are still appreciating very well, and certainly a great place for investors and homeowners. And this is not what this is about, but we're a longtime mortgage loan officer through North Carolina Housing Finance Agency. That's a very popular product, the down payment assistance and everything. So make sure you're always looking into those. But North Carolina, this basically is showing that there's opportunities. All right, so the REO versus foreclosure, they're kind of interchanged a lot of times, but the way that either a realtor or especially investor is looking at things is, all right, trying to find and talk to who may be looking to sell or need to sell prior to it getting to the courthouse, to an auction, or being listed for sale and actually after foreclosure. So you'll have good realtors that will kind of beat the bushes, reach around, and the ones that are as far as realtors and investors that are very connected to their market, that's the ones that are going to be very successful in this area. And that's trying to offer help to someone like, hey, I'm looking to sell, and hey, I might have this wrong with the property or whatever. And it may not be ready or able to be best out there on the market in its condition or whatever the scenario may be. And that's where a realtor can jump in early and potentially make a connection, whether it is listing it or connecting with an investor after listing or et cetera. Number two, scheduled auction. There's some that end up going to an auction, not a courthouse sale type auction, but private auctions, things like that. And certainly another good way for a realtor to help investors in that area. Courthouse sale, you're not going to be involved in that, but helping a real estate investor, at least advising them in this area, can be a very helpful thing. And so what I mean by that is, courthouse sales, cash. You got to have a deposit down and then you got to close quickly. You're usually not able to actually see the property, go inside of it, et cetera. I'm going to talk more about that in a little bit, where we do have a solution for that type of a thing, and it will help you as a realtor later potentially once this investor owns the property. And then there's REO, bank owned. That's what most people are aware of. It's been foreclosed on. The bank buys it back at the courthouse sale, and now it's going to be listed with a realtor, real estate agency, and it's going to be listed on MLS, and that's where all the buyers can potentially make an offer and buy. You can see it, get it appraised, the whole works. So those are the main categories, and then we're going to talk how to get through all of these processes successfully. Okay. All right. So what I mentioned in the beginning, one investor relationship can create multiple closings. As I said, you could have someone, let's say that you're helping them find a property that is in need of some renovation. You could, if it's listed, you could help them buy that property, and that's one commission, which is great. And then they renovate it. Then let's say that this one is looking to flip it or sell it. Then you can help them list it for sale. And so that's another sale, another commission. And then that is possibly you could even get, or your agency get the buy side, the buyer on that side. Refinance means they might buy it, fix it up, and then refi it into a DSCR loan, typically, which is an investment property loan that can be deeded into an LLC, no income verification, and aggressive rates. And that's something where they can then hold it and do a short-term or long-term rental. And then once they've done that, you can repeat. So you can help walk an investor through this process. Of course, have the right financing in place as well for them to acquire the property, get it fixed up, and then either selling or getting the permanent loan that they need. And then you go and do it again. We have so many that we work with like that, and it's a beautiful thing. And keep in mind too, and this doesn't have anything to do with what's on here, but there's so many also that whether they're a veteran or they were a first-time buyer before, and we have this happen a lot where they bought a house, primary residence, and now they want to move and they're trying to decide on, should I sell my house or should we rent it out? And that's where you as a realtor can go in as the professional and strategize on this. Find out, okay, this is about how much the market rent is on this property. Is it better to be short-term or long-term rental? Which do you feel more comfortable with as a landlord? And then, okay, here's what it could sell for. What's the benefits of that? Are you going to be taxed on that? Did you own it long enough and occupy it long enough? Things like that. So that's where the professional realtor can come in and really help them with that. And then combined with an expert lender that can show what are all the financing options here. And often there's a lot of buy, then sell, or rent type strategies that we love doing that could possibly be involved there. So keep that in mind, that someone doesn't have to be just straight out, I'm just an investor. It can be changing from one property that's a primary over into an investment, strategize with them there, and then help them buy and move into the next property. Okay. So buy, renovate, and sell. This is where we do have a financing company, which is our sister company called Creative Financing Solutions. And they will, for a seasoned investor, they will finance up to 90%. And once they have more relationship, even 100% of the purchase price on an investment property. Typically, we'll do 100% of the renovation cost. And then another important figure is, what is it worth after the renovation, or the ARV? Okay, so might buy a property for 100,000. I'm going to do $30,000 of improvements, and it's going to be worth 200,000 at the end. And they're either going to flip it, make a profit, sell it, or they're going to refinance it and hold on to it. So The big things that you as a realtor would need to do is make sure that, one, okay, obviously you want to identify the best price you can get for the property. And then if the investor is saying, here's how much in renovation that I want to do and what type of renovation, and making sure, okay, hey, we got comps pulled and this is the value. We feel real good that this is going to be a profitable venture here. And then they can figure out how long it's going to take to do the work, et cetera. So that's where you come in as one of the areas of being a professional for them. And then once that's done, oh, well, I'm sorry, let me back up. Another thing that will be helpful, even if you don't handle property management, I'm sure you have someone in your corner that you'd be able to uh, let them know if you did rent it out, here's what it would be. And they can figure that profit there and then decide, is it better to sell or not? But that's where it's a great deal. On the renovation side, on the purchase renovation, it is a 1 year interest only loan. So they got 1 year to get the work done. And that is a very popular thing. And they can use cash if they want to, but many like to use other people's money and of course try to churn it and try to get the money, get it renovated, and of course get it out of that temporary loan as quickly as possible, either in a sale or that long-term financing. So the renovate and hold, that's where we would go more into after the work is done on the property. And a common term is called BRRRR. And that is where, hey, I'm buying this property. Here's how much I'm going to have into it. And I want to pay that temporary loan off and then get a permanent 30-year fixed rate loan that I'm going to be able to cash flow and be able to gain wealth over time. So by doing it this way, buy, renovate, and then holding, you're getting typically by buying it right and at a lower price than the market typically, you're going to be able to get it renovated and have instant equity. So that's a great thing. And then also combine that with the cash flow over time. And hopefully down the road, it gets more value and you can refinance money out of it to go use down payment on another property and just keep on repeating. So again, very, very popular with clients these days. Courthouse step opportunities. Again, typically everybody knows it's got to be cash. Or you could have, home equity line of credit. So an investor could have a big line of credit on one of their properties, either primary or investment, so that they can just pull it out and go pay cash for a property. There's just cash already in a checking or savings account. And then another option is the company I mentioned earlier that does the purchase renovation for flips or eventually turn it into a rental. Most of the time, there's no appraisal needed, which helps on the courthouse steps. Again, that's not something you're involved with, but you can help them do the research and they will appreciate the mess out of that. And so that is something where, as long as the title work is good, which you're going to do that anyway, you get the insurance in place, which you're going to do anyway, that it could be a situation where you go in, you have a proof of funds letter as an investor to go be able to make an offer on this, hopefully win the bid, and then quickly, very quickly, as fast as the title work can be done and the insurance can be done, be able to close on that property, never having it appraised, never walking in. And of course, everybody knows the risk of buying that way, but that's the way it is. And so keep that in mind. Again, great way to be able to buy from the courthouse steps. And all right, so the next strategy, the next deal after this one. So finding not only the right property, the right financing, the right profit, the right rental model, et cetera, if they're holding it. It's very important to plan for this one. Probably if someone is scaling their portfolio, not paying cash, looking at a smaller down payment, maybe because of buying the property and hardly putting any money down by buying it as a distressed property and renovating it. But then holding onto that property and coming up with, okay, doing another 20% down or 25% down on a ready to go DSCR property or smaller down payment with the purchase renovation financing. So you could really have a smaller amount of money in there, and it may be able to make it where an investor, instead if they're paying cash and they're like, well, I pay cash for this one, 200,000, the renovation and everything. And then I pay cash for this one. I only got $500,000, which is a lot of money. But if you spend 400,000 on two properties, you're not going to feel as comfortable going to buy the next one. On this, you can spread $500,000 out on a lot of properties because you're only putting a piece in, the down payment and your closing costs, unless you have that paid by the seller. So being able to do all that and repeat more often is where most investors want to be. So keep that in mind. And again, as I've talked about the whole time, this is where realtors can be the professionals that you are to be able to provide value to these real estate investors. Let's see, I've pretty much gone over all this, but, just goes a little bit about, how the short-term purchase renovation works. And then the DSCR, well, see me back up. On the purchase renovation, it is deeded in an LLC. The loan is in the LLC, and whoever's in that LLC are the guarantors. Interest-only loan, 12 months, great product. No income verification, by the way. It looks at assets, credit, and then the property. That's it. Long-term DSCR, that is also allowed to be deeded in an LLC, which is what most investors like for liability protection. And there's no income verification. You can make $1 billion or be unemployed. That doesn't matter. It doesn't help or hurt you at all. It just goes by what is the rent of the property and does it cover the new mortgage payment with taxes, insurance, and HOA if applicable. If it does, the income part's fine. Then it's credit and the property. Great products for that work together really well for investors. All right. So, try to go through this pretty quickly here. This is to get you to the point of understanding this better. I do also have a YouTube playlist of a few actually that deal with just investors to be a great thing for you to check out. Most of the videos are about a minute or less and goes over a lot of these things, a lot of strategies, and you can also share these things with others. I'm going to be talking about this in the actual convention coming up in October in more detail. So, but this is a little information to just make sure that you're thinking about this. And that's all. That's all I got right there. There's all my contact information. You click on that QR code. I've got payment calculators, YouTube playlists. I get to know your loan officer. You want to know more about me personally, follow me on socials and all that. So that's all I got right there. If any of you want to ask any questions, put them in the chat and I'll be happy to talk about them. All right. So that's everything. So if you would like, feel free to reach out to me anytime by all my contact information here. Follow me, and I appreciate your time today, and you have a very blessed day.